Hello and welcome to Business 101 with Heather Hines. I'm your course instructor for this online course. This is just a short video, so here we go. Chapter 1 is all about businesses, who opens them, and how they are affected by the global economy. What is a business? A business is one that sells goods and services. Goods are tangible items. That's when you go to the grocery store and you purchase a box of cereal. Services are those intangible items. So that's you going to the doctor's office. That's when you go and you get a massage. So goods and services. A business is anybody that is seeking to provide a good or a service to consumers in exchange for money or profit. Now, there are for-profit companies and not-for-profit companies, but they're all considered businesses because they're trying to create revenue. And we'll talk about revenue in just a minute. Now, where that profit goes, that's another thing. For-profit businesses, they give that profit to the owners. Non-profit, they give that profit away to others. Entrepreneurs. Entrepreneurs are the ones who are taking the risk. They are risking their time and their money in order to start a business. Businesses, as they take money in, so they sell you, the consumer, a good or a service, they're taking in what's called revenue. So revenue is all the money that they're taking in. Profit is what's left over after all their expenses are taken out. So what kind of expenses might a company have? Well, they have their overhead costs, the cost of the building. They might lease it or own it, but they have to pay for the building that they're in. Maybe they have utilities, and maybe they have to pay their workers. Those are all expenses that have to be taken out before you consider their profit, or in some cases, a loss. Now, if you'll notice here within the lectures, I try to kind of give you little helpful hints for your critical thinking questions. So CT means critical thinking, and so this page will help you with critical thinking number 2. So for example, it says in June, Cellular Unlimited sold 500 phones for $40 each. After all protection costs and expenses, each phone costs approximately $30 to produce. What is Cellular Unlimited's revenue and profit? So revenue, remember, is all the money that they take in. So what did they take in? They took in the $40 per phone times 500 phones. And their profit, well, you have to take their revenue and you have to subtract all their expenses. So what are their expenses? It's $30 a phone times 500 phones. And once you figure that out, those are their expenses. You subtract the revenue minus the expenses, and that will give you the profit. Next, let's talk about standard of living. Standard of living is how you, living in a society, how much can you purchase with your money? How much buying power does your money have? So if your standard of living is high, that means your money can buy you all the necessities plus some luxuries. If you have a low standard of living, that means that you can't buy a whole lot. So here's the first critical thinking question. What is standard of living? If you live in a country where you make $1 million and it costs $25,000 to buy a loaf of bread and $50,000 for a gallon of gas, do you have a high or low standard of living? Explain your answer. So let's think about it. If it costs $50,000 in order to buy a gallon of gas, how many gallons of gas can you purchase on $1 million? Well, that's only 20 gallons of gas. So whether that, and I always get students that ask, is that $1 million per month or per year? Well, regardless of whether it's per month or per year, but only being able to buy 20 gallons of gas after you get your paycheck, well, that's pretty low. And if it's costing you, if it's costing you $50,000 for a gallon of gas and $25,000 for a loaf of bread, and you can only buy a few loaves of bread with each paycheck, is your standard of living high or low? Well, that's for you to read the textbook and figure out and explain your answer. Stakeholders, those are anybody that is affected by your business. So stakeholders can be the people that loan you money, it can be the customers, your workers, you, the owner, stakeholders, anybody that lives in the environment. And so you should be very familiar with this word. It'll come up constantly. So you should know that stakeholders, not to be confused with stockholders. Stockholders are the owners of a company. Stakeholders are anybody that is affected by the business. Outsourcing and insourcing. Sometimes a company has to do what's called outsourcing, which means they say, hey, you know what? We make automobiles really, really well, but maybe we're not so good at payroll or some other items that they need to do to keep their business going. So they might outsource payroll or some other functions so that they can focus on their core capabilities. And we'll talk about more about what core capabilities are in further chapters. So outsourcing. Now there are different types of outsourcing, and we'll talk about different, contract manufacturing and other types of outsourcing. But just for the time being, we'll be very basic: outsourcing and insourcing. Be familiar with those two terms. Which brings us to critical thinking number 3, where this company, they decide to stop manufacturing phones and focus all of its efforts on sales. They create a contract with a small local manufacturing company wants to produce the phones. So according to chapter 1, what term is used to describe this scenario? Hopefully from this slide you know the answer. So what are the ups and downs of entrepreneurship? We hear of people who make millions and millions of dollars as entrepreneurs, right? We have Bill Gates, we have Facebook, we have Elon Musk. All of these people are entrepreneurs. So what are the ups and the downs? Why aren't we all entrepreneurs? Well, some of the ups are, you have the freedom to succeed. You have no ceiling for your salary. Your salary is what you make of it. You can hire your own staff, and you have complete control. What are some of the downs? Well, you don't have that guaranteed paycheck. When you go and you work for somebody else, you're pretty much guaranteed to make, $15 an hour or, $80,000 a year. You're also usually given some type of package where you get vacations, some health insurance. But you don't have that when you're an entrepreneur. You don't have that safety net of that guaranteed paycheck. In order for an economy to thrive, they need what's called factors of production. So an economy or a society, here in the U.S., you need 5 basic factors of production. That's land, labor, capital, entrepreneurship, and knowledge. You need to have some combination of those 5 in order to thrive as a society. Now, critical thinking number 4 asks us, hey, country A is rich in land and labor. Country B is rich in knowledge and entrepreneurship. Which country do you believe is wealthier, country A or country B? And explain your opinion. Well, let's think of this. There are countries that we know of that have a lot of land and have a lot of labor, right? So, for example, maybe China. They have a lot of labor. They have over 1 billion people, and they have quite a lot of land as well. Now, do you think that country is wealthy? Now, maybe you can go do some of your own research on that. Versus a country that is strong with entrepreneurship and knowledge. So entrepreneurship, you have to have the government supporting entrepreneurship first off, and you have to have people that are willing to take those risks. And then you also need to have people that have knowledge, the know-how of how to start a business, maybe a strong education program in that country. So think about it, read the textbook. There is a correct answer in this scenario, so make sure that you understand why one country would be wealthier than the other. So are land and labor more important, or is it entrepreneurship and knowledge? The business environment is segmented into 4 basic segments, and if you go further into business, you'll see this little segmentation over and over again. So the first segment is economic and legal. So what kind of laws are there in the society? Is the currency tradable? And we'll talk about the currency being tradable in the next slide. And what are the tax regulations? Now there's also the technological environment, which is a newer segment, which is what kind of IT does the company or that society have? What kind of access do they have there? Then there's the social environment. How diverse is your demographic? Is your demographic older or younger? What kind of family changes are affecting the business? And then you have the competitive environment. How competitive are there? Is it pretty much a monopoly, or is it very extremely competitive? So for example, if there's lots of different restaurants, people tend to not be super committed to just one restaurant. So for example, you might eat at McDonald's one day and then Burger King the next. So that is a very competitive environment. Now within the economic and legal segment, we have the government's role in business. So critical thinking question number 5 talks about country C, and they want to promote business. They really want entrepreneurship, right? So according to chapter 1, should they increase or decrease their taxes? Please explain your answer. Now, what are some things that, just using your common sense, what do you think would make you as an entrepreneur want to start your own business? So let's just say you start your own business and you know that after you have your revenue minus your expenses and you get your profit, right? Remember, profit is revenue minus expenses. So you have your profit. Let's just say the government comes in and they take 90% of your profit. Does that incentivize you to go and start your own business? Versus, let's just say, for example, right now I think the flat tax for corporations is 21, maybe 22%, versus what if it was only 20%, right? Would that incentivize you to start your own business, where if you start your own business, you're in a 20% bracket, versus if you continue working, maybe you're in the 35% tax bracket? There's some pros and cons. So if you're in a government that minimizes spending, why would they minimize spending? So that they can also minimize taxes that they collect. They must allow private ownership of a business, and we'll talk about that more in chapter 2. We want the free exchange of goods and services, and this is again part of chapter 2. You want to have enforceable contracts. That means that enforceable contracts are very important to business, so that you're guaranteed, hey, you bought this for $100,000, so I have recourse if you fail to make the payments, right? You want to have a tradable economy, and you want to minimize corruption. So those are all things that will help promote business within a society. The last part of our lecture talks about the evolution of business. While I don't have a critical thinking question about this, these are things that you need to know for your quizzes and your exams. I guarantee you're going to see these 4 different eras on a quiz or an exam. All right. So let's first talk about the agriculture era. That's the first era in the 1800s, where they thought, okay, let's produce as much food as we can, right? Then they shifted into what's called the manufacturing era. The manufacturing era started with industrialization. You have these machines that can do jobs that used to be done at home, and these machines are in factories, and factories, you need people to go work in these factories. So you have people moving from the farm to factories. So that started the manufacturing era, where the push was to manufacture and produce as much as you possibly could. Now, as technology progressed and it became more efficient and it can do even more for us, then that leads us to the service area. So now we have all these people free to do other things. And so that leads us to the mid 1980s, where the service industry started creating high paying jobs, doctors, lawyers. You go to a restaurant and you have people waiting on you, you have managers. This is all part of the service era where you don't need people to manufacture because you have machines that can do all that for you. So now you have all that freed up labor to go into the service industry. Lastly, we have the information technology era. That's this era that we are in now where things are becoming more digital. It's affecting all of the industries, agriculture industry and the service industry, where everything's digital. You have things in the cloud. You can, anybody can communicate with thousands of people through Facebook, Twitter, or even millions of people, YouTube. Before, if you wanted to take out an ad, you basically went and you took out an ad in a newspaper or a billboard or a commercial. But now there's so many different ways of reaching your target audience. You can join on Facebook. You can go and email a bunch of people. You can, so many different ways. You can make a quick, funny video. So information technology is definitely affecting all of the industries combined. So after watching this video, I hope it helped you in understanding Chapter 1. What